Ignoring this new rule about mobile wallets could cost you far more than just a little inconvenience. It could mean massive fines, or even jail time. That is how serious the latest Taxpayer Identification Number (TIN) requirement is for anyone in Fiji using or planning to use a mobile wallet. And this is the part most people miss. It is not just a formality or extra paperwork. It directly affects whether you can keep using your e-wallet at all. The Fiji Revenue and Customs Service, FRCS, is reminding every individual and business that having a valid TIN is now compulsory when opening a mobile wallet, e-wallet, account. In simple terms, if you want to sign up for a new mobile money account, you must provide a TIN, no exceptions. This change stems from measures announced in the 2025 to 2026 National Budget Promulgation, which introduced stricter rules around how e-wallets are registered and used. There is also a very important rule for businesses that might surprise some people, and maybe even spark debate. Every business is required to keep a separate e-wallet account that is used only for business transactions, not for personal spending or mixed use. Think of it like having a dedicated business bank account. Your sales, payments to suppliers, and other business-related transfers must go through that business e-wallet, while personal purchases and family expenses belong in a different, personal account. FRCS is urging businesses to make sure their e-wallet accounts are correctly set up with a valid TIN and are used strictly for business purposes. That means if a business owner has been casually using one mobile wallet for everything, groceries, school fees, and customer payments, this practice now clearly goes against the new expectations. But here's where it gets controversial. Some small or informal businesses may feel this rule adds extra hassle and costs, even though it is designed to improve transparency and compliance. The consequences of ignoring these requirements are anything but minor. Under the updated provisions of the Tax Administration Act, failing to comply could result in a fine of up to $25,000, a prison sentence of up to 10 years, or even both. To put that into perspective, what might feel like just a delay in updating your details could legally be treated as a serious offense. On top of that, non-compliance can lead to your e-wallet services being suspended by the providers, meaning you may suddenly be unable to receive payments, send money, or carry out everyday transactions. Because of all this, FRCS is strongly encouraging both individuals and businesses to check that they have a valid TIN and to update their information with their e-wallet service providers as soon as possible. Do not wait until the last minute. If systems are busy or you run into issues close to the deadline, you could easily miss the cutoff and face unwanted disruption or penalties. A practical example: a small shop that relies on mobile wallet payments from customers could suddenly be unable to accept money if its account is suspended for not having a TIN linked in time. The official deadline to register or update all e-wallet accounts with a valid TIN is the 31st of December, 2025. That might sound far away now, but it will approach quickly, especially for businesses that need to open new accounts, gather documents, or separate personal and business usage. And this is the part most people overlook. It is not just about ticking a box for compliance. It is about protecting your ability to keep your money flowing smoothly and avoid long-term legal trouble. Now for the big questions. Do you think making TIN mandatory for all mobile wallet accounts is a smart move for improving tax compliance and financial transparency? Or does it create too many barriers, especially for small and informal businesses that rely on simple, flexible payment options? Should there be softer rules or special concessions for micro-entrepreneurs and rural users? Or is strict enforcement the only way to make the system fair? Share whether you agree or disagree with these new requirements, and why, in the comments.